You see this blue zone. Price made a strong move, came back right into it, and immediately reversed. That is a fair value gap, and once you understand how it works with an order block, you will have the most precise entry in all of smart money concepts. Let's go. A fair value gap is a price imbalance that forms when the market moves so fast it leaves a gap between candles. You look at 3 candles during a strong impulse move. For a bullish fair value gap, the low of candle 3 is higher than the high of candle 1. The gap between those two levels is your bullish fair value gap, mark it blue. For a bearish fair value gap, it works in reverse. The high of candle 3 is lower than the low of candle 1. The gap between those two levels is your bearish fair value gap, also mark it blue. Price always tends to return to fill these gaps before continuing in its direction. Here is the bullish fair value gap step by step. Candle 1, the starting candle. Candle 2, the big bullish impulse. Candle 3, the candle after the move. Draw a line at the high of candle 1. Draw another at the low of candle 3. The blue zone between them is your bullish fair value gap. When price pulls back into this zone, it acts as support and price reverses upward. Real example on EU on the 4-hour time frame. You can see the 3 candles numbered 1, 2, and 3 that created the bullish fair value gap, the blue zone between the high of candle 1 and the low of candle 3. Price pulled back right into the fair value gap and reversed upward. Clean reaction, precise level. That precision is what makes the fair value gap so powerful. The bearish fair value gap works in reverse. Candle 1, the starting candle. Candle 2, big bearish impulse. Candle 3 after the move. Draw a line at the low of candle 1 and another at the high of candle 3. The blue zone between them is your bearish fair value gap. When price rallies back into this zone, it acts as resistance and price reverses downward. Real bearish fair value gap on EU on the 4-hour time frame. 3 candles numbered. Blue zone between the low of candle 1 and the high of candle 3. Price rallied back up into the fair value gap and immediately reversed downward. Same pattern, same precision, just the opposite direction. Now here is where it gets really powerful, combining a fair value gap with an order block. The fair value gap is created by the impulse that leaves the order block. It sits in front of the order block, in the bullish candles that follow it. Orange order block, blue fair value gap in front. Price pulls back, fills the fair value gap, then arrives on the order block, and the moment it touches the order block, it explodes upward, institutions defending their zone aggressively. For me, a bullish order block is only valid when the impulse in front of it created a fair value gap. No fair value gap, no trade. Real example, orange order block, blue fair value gap in front. Price pulled back, filled the fair value gap, then hit the order block. The moment it touched the order block, it exploded upward. No hesitation, immediate and violent reaction. Higher time frame bullish. Order block with fair value gap confirmed. Price explodes on the order block. That is your entry. Stop loss below the order block. Take profit at the next buy side liquidity above. 3 rules for a valid fair value gap. Rule 1. Strong impulsive move required. Small or gradual moves don't create valid fair value gaps. You need a decisive, fast move. Rule 2. The fair value gap in front of the order block must be fresh and untested. The first time price returns to fill it before hitting the order block. The reaction is the strongest. Rule 3. Aligned with the higher time frame structure. Bullish fair value gap in front of a bullish order block only in a bullish higher time frame. Bearish fair value gap behind a bearish order block only in a bearish higher time frame. 3 mistakes to avoid. First, entering the moment price touches the fair value gap. Wait for a lower time frame change of character before entering. Price can fill the entire gap and continue through. Second, trading fair value gaps against the higher time frame structure. A bullish fair value gap in a bearish higher time frame is not a buy signal. Context always comes first. Third, using fair value gaps that are too small. Always look for a clear, obvious fair value gap in front of your order block, not a tiny imbalance. Next video, premium and discount zones, how to filter your order block and fair value gap trades to always buy at a discount and sell at a premium. If you want access to my free daily market analysis, join my free Telegram channel. The link is in the description. I share my setups and my gold analysis every day for free. Drop a like, subscribe for the full Smart Money Concepts series, and see you in the next video.